fuck up, motherfucker.
All right, what's up, guys? It's May 11th, 2026. So, I think the bubble's gonna be continuing. Oh, man. Yeah, leverage everything, bro. Leverage everything. Nothing is going down now. Well, I mean, something might go down this week because this week is a monthly options expiration week. So, maybe it'll cool off a little bit this week into Friday. So, this Monday might be the last big pump because we got a nice news event. Lumentum has been added to the NASDAQ 100. So, yeah, your 401ks, your ETFs that have a lot of tech in it, your mutual funds that have a lot of exposure to tech, they will be buying more and more Lumentum stock, even though it's already very, very expensive. So, this system, as I've told you, is designed to go up. Okay? The US stock market is designed to go up by hook or by crook. You got Michael Burry trying to short semiconductors. You got Martin Shkreli's trying to short semiconductors. They're going to get burnt so bad before it actually goes down. Like we might go through July, even half of August before you see a significant drop in semiconductors at this point. They are going to pump this no matter what. So last night, Korean market went up over 5%. It hit a circuit breaker. The Korean markets had to shut down because too many people were buying up more memory stocks over there. And then guess what? It transfers over here and we go up. So the whole Korea S&P 500 back and forth continues on. And the thumbnail of this stream is this thing. I know a lot of you guys don't really understand options, even after I talked about gamma, delta, and all that. Okay, forget about it. Let's just say you don't know nothing about options. Just look at this blue line going up and down like crazy. Okay, look at this blue line. When it goes very wide, when the blue line goes up and down in a large range, that means there's a lot of volatility. Let's just say that, okay, in the way the options market is moving. When it gets at a very high level, that means the market makers will buy dips and sell rips. The market is moving up in a straight line. When this level is low or pretty much negative at certain places, that means that we have a bear market situation where when you have a big force selling, okay, event, a liquidity crunch, it will cause more people to sell very violently. But it also could mean at some times you have bear market rallies, meaning you have points in the bear market where all of a sudden it flips and you have a big push up and they're forced to buy all the way back up again. So right now we're at a very high positive level. We haven't seen this since the Ukraine war stuff, the whole freaking Jerome Powell cranking up interest rates to stop inflation from COVID. So we haven't seen it since then, right? And the other time too was during the 2021 tech bubble after Trump got kicked out. Okay, we had Biden voted in, and then the market just started flying up like crazy on the COVID vaccine hype, right? So that was the other time. So right now we're on this AI hype train. So with this blue line being at a very high level, we will have a nice bubble. Okay. So Martin Shkreli, Michael Burry, they're going to get burnt in the next coming months at least. If there is some kind of crazy event where this breaks, um, I'm guessing it will be around August, okay, July, August, somewhere around then. Unless the new Fed chair will speak in June 17th. June 17th will be a very important day. Okay, so mark your calendars for June 17th. And that week will on the June 19th, options will expire for quarterly. options, futures, and the VIX. So, well, the VIX will finish up on the 16th, the day before the new Fed chair talks. But if there's going to be a problem in the markets, maybe it'll be after he talks on the 17th, and then we'll have a crash then. But if we don't have a crash then, we'll see you in July. We'll see you in August then. Okay, that's it. Let's see. Will HUT retest 94, 95? I don't know. I have no idea. This week it could retest. If the semiconductors crap out this week, this will be your last chance to get a dip before next month. So if the Bears want to try to stop this party, it better be this week. This will be the time. Time to leave Micron? Yeah, probably time to leave Micron this week. See what's going on. I think we're done here. This week will probably be it. I think the money from the semiconductors will go to HUT, right? Or mRNA or HIMS. Or maybe they'll go to the rocket ship stocks, right? Or the satellite stocks. We need some earnings over there. We only got one earnings on Friday, okay? We need some more. All right, what's up, guy, bro, idiot? What's up? My taco is doing good. Yes, that's right. Taco. Okay, so yes, we will see. Built to spill. What's up, Jim? Yeah, what's up, Eric? Okay. So hopefully I don't think we have to worry anymore. This is pretty much it. This whole gamma positioning says that we should have an easy time to go even higher, but it probably will not be semiconductors, I'm guessing. I think it's way overheated. If the Korean stock market is trying to stop it from going up anymore, because I think the Korean stock market at this point is a bubble, right? It's way too much. You can't ride on Samsung and SK Hynix forever. All right, I don't know what this means. The spread between the average Mag 7 stock implied volatility and average NDX, so NASDAQ 100, single stock implied volatility is inverted and hit the biggest discount we've seen. That's true in the upside space out 1 month, 3 month, and 6 month. I don't understand this. I don't know what this means. So I just put it out there because this plus this plus this, here's another one. S&P's call skew is the most extreme since Liberation Day last year in the 99th percentile on a 2-year look back. Brian Garrett wrote, those who refused to increase nets at any point in the last month were forced to buy upside this week. Well, so I think when you combine all this stuff together, it means that people will be forced to buy stocks as they go up. Anybody that missed the dip at the end of March and have been waiting in cash and looking at this and going, what the hell is wrong with this stock market? Why does it keep going up? Why there's so much bad news out there? Food inflation, fuel inflation, water is now disappearing from communities because of data centers. So they keep looking at the news, right? They keep looking at the news. They keep seeing bad stuff. They're going like, how the hell is this going to keep going up? And yet the stock market doesn't give a crap about what they think. It's continuing to go up, and all the options flows, all the futures markets, all the derivatives markets basically is telling them that they are forced to buy. There's no choice but to buy. The last time we've been in this kind of feeling was during COVID. There is no alternative. You ever heard that before? TINA, Tina. There is no alternative. Essentially, it means that like people cannot buy anything else, and then they look at this and they are going to be forced to buy it, even if they don't want to buy it. That's the type of feeling in the psychology, in the mechanics of the markets, the way it's set up right now. It's really going to be a hard sell to tell people that something's going to crash it. Unless Trump wants to blow up Iran in a surprise attack again. That's the only other way, right? Trump has to start shooting at Iran again, or Israel. Somebody has to shoot at Iran. Like, I don't see any other way to make this thing go down. Earnings is over. All the earnings are out. What earnings are there that will crash it? Oracle? Maybe. But that's like a month away. How about Broadcom? Again, a month away. Nvidia? 2 more weeks. We got Nvidia earnings. Maybe Nvidia will crash it. I don't know. We'll see. All right, ASTS and Lunar are apparently underperforming earnings. ASTS hasn't reported yet. It's after the close. Lunar will be like LUNR will be in 2 days or something like that, sometime this week. So those will be the next ones. So we don't know about those yet. Okay, that's it. Okay, but so you can take a screenshot of these things and you can go ask Grok or AI or something. What does this mean? What does this mean? What does this mean? Yeah, the AI will tell you. So I I just know that all these 3 things means that like it's gonna go up. That's it. That's all I need to know. I don't. So take a screenshot of the full picture here for yourself. All right, there you go. Here's another picture. Here's another picture. So if we are going to have a 1999 type bubble next year, let me do this analog for you. Netscape Navigator. If you remember, this was the first big popular web browser of the first internet was Netscape. It was Netscape Navigator. Okay. Before Netscape, it was Mosaic. It was basically a university created browser for the early internet. And then after that came Netscape. Netscape took over. And then after that, Microsoft came in with Internet Explorer and bullied Netscape and all the other guys out of the game. So it became Internet Explorer after Netscape. But Netscape came out first. That was the first internet browser, web browser for the masses. And more people were using the internet at that time. This was the early days. So if we look at ChatGPT is kind of like the first mainstream chatbot / AI-esque invention, right, of this new internet, where now people just use AI on the internet to ask questions. So this is kind of like browsers, and then the next step was search engines like Google, right? So the first one was Yahoo, and then we had Alta Vista, Ask Jeeves, and all the other competitors. And then we had Google, which then dominated everything in the 2000s, 2010s. And now we have the AI wars. So we got the ChatGPT. So if ChatGPT was mapped out at the same point as when Netscape came out in December of 1994, that means that maybe this kind of timeline lines up. We're pretty close to the point where the dot-com bubble starts really going crazy. Okay, so we're gonna have a little crash, and then we're gonna have a pop, and then at the end of the stock market bull game, we'll have this huge run up when everything that had AI in its name will just start blowing up. So that's good. That's a good way to look at it. Okay, so we have some time in 2007 and early 2028. Okay, we're gonna have this nice bubble here. So this ain't a bubble yet. This might look like a bubble to people, but sorry to say, it's not gonna pop anytime soon because we just got here. We just got to the point where we're gonna have a lot of buying right now in the next coming months because of all these positionings on the options market. And look at this. So Reddit found a new stock. They found a stock with the RAM on it. So they found a stock that didn't pump with the other memory stocks, and they started talking about it. And on Friday, it pumped 61%. I think it's up 40% right now on top of that 61%. So yeah, this has a bubble-like feeling, right? Oh, it's up 56%. Okay, so there you go, right? Right now. So yeah, anything with RAM in its name will now get pumped, right? Anybody with RAM in its ticker symbol will get pumped. There you go. There you go. So this is the kind of feeling you get when you're in a bubble. Okay, so this is a sneak preview of how crazy things will be. It's just like the crypto markets back in 2021 when you had uh, Shinu Ibu, right? And then you had the NFTs. So this is why I don't believe in fundamentals. So anybody that comes over here and tells me fundamentals, I'm like, bro, I went through the dot-com bubble. If you think crypto markets are a special thing, that stock market people are supposed to be smarter, no. The smart investor is in the bond market. The stock market is just as retarded as any other stupid bubble market. The bond market is where the smart people invest in. Stock market is full of dummies, and you can see it right here. So it's not insulated to the crypto markets. Anything that happens in the crypto markets, it's the same psychological behavior. The only difference is that the crypto market, because it's so small, it's easily manipulated by people with less money. Okay, so people with millions of dollars can manipulate that kind of market. While if you want to manipulate the stock market, you need billions, billions upon billions, right? That's the only difference. It's just a scale thing, right? And the maturity thing too. There's a lot more regulation in the stock market, but usually those regulations only happen after an event. We're in a new age now, right? Where there's a lot of options flowing through. We have a lot of ETFs. Maybe later after the great crash, people will be like, oh, well, now we see that ETFs and all the options flows and all this stuff caused this crash. Now we'll have to add regulations, but they'll only add the regulations after everyone made their money and pulled out, and everybody else got rug pulled. Too bad. You got rug pulled. So that's the only difference. It's just a scale thing. Yeah. Okay, historically, they underperform at least over the past year. We'll see. Oh, I remember Excite. Oh yeah, Excite. I remember Excite. That was another one. I thought Ask Jeeves died in Y2K, but apparently Yahoo's still around, right? Yahoo's still around. All this stuff is still kind of around. Yeah, so, but anyhow, all right. I think that's all I gotta talk about this. Let's look at the markets. Okay. Here we are. Let's look at MRAM right here. MRAM. So MRAM from last November to March was around $8. Went as high as 16 in January. And I guess people started figuring out, yo, wait a minute. It has RAM name, so let's buy into it. And this is what happens today. We are up 56%. Very good. Very good there. But the star of the show is Lumentum. Lumentum is now added to the NASDAQ 100. So everybody buying ETFs, you are buying Lumentum and you are helping people in Lumentum go up even higher. So everybody with their 401ks, every 2 weeks, you are buying stocks. Those 401k flows will also go into Lumentum. So if you didn't get a lot of Lumentum now, you're going to get a lot more later, because it's in the NASDAQ 100, it's a very important stock. It's just like Lumentum got added back into the S&P 500. It got kicked out of the S&P 500 some years ago, and got added back maybe, I don't know, early this year or late last year, I forgot. So now Lumentum is in the S&P 500 and the NASDAQ 100, so that gets a double boost. And you could see the other stocks went up with it that are in that sector. Ciena, CIEN, Coherent, COHR, and AAOI, the gambling stock du jour of the sector. Yeah, that's it, AAOI right here. So nice large range. I don't know what's going to happen after it completes this range. Are we going to go up even higher? It's already at its 2018, 2017 peak. So I don't know. Yeah, pretty much this area here at 100 was the last time it was around here in late 2017. This was the stock I was practicing trading on. So I learned right away, oh yeah, this is just emotion and psychology right here. Oh, hype, 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 crash, 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 all the way down. So it's like, oh, interesting there. So now you see it again. It's gotten another breath of air or whatever of life. And will this be the next move to 200, 300, 400, 500. Why not? Why not? If we look at the way data centers are being constructed now, I guess if you assume that there's going to be continued growth with ChatGPT and um well, what's the competitor? Claude and Anthropic, whatever what they call Anthropic. Yeah. So Microsoft, Google, Apple, Facebook, Amazon. So all those guys will start paying more money in their cash flows to build this out. Then yeah, we're undervalued still. I mean, like I told you guys, even after Intel went up, if you just compare it with price over earnings growth, then Micron should be about $8,000 a share to compete with Intel right now. With the way Intel is valued, if you want Micron to be valued at the same level, then yeah, Micron should be $8,000 a share to be at the same level that Intel is right now. And Intel right now is at 6. Oh, great. So there's two of me now. All right. So yeah, Jeremy was saying there was like issues with StreamYards. He couldn't like connect certain things and whatever. Yeah, I think StreamYards is screwed up at this point. Um, Probably their data centers themselves are getting hit. I heard Iran is trying to cut off the Gulf states from their internet cables. So yeah, we're gonna have some internet cable issues. So if StreamYards has to host their data in those places, those countries, then they're kind of fucked. These data centers are going to be used to track and survey even harder. Yep, 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 yep. Very good, very good. All right, so let's continue on. Let's see. Yeah, I think it's a very good price. I mean, overall, like technically, if you want Micron to be valued at Intel, like I said, it has to be $8,000 a share for Micron, but I don't think that's going to happen, or at least it's not going to happen right now, right? Maybe it'll happen next year, but it's not going to happen right now. If you want to get back in Micron, I think like wait till August, September, October. Let's see what semiconductors do then. Then you could get back in. But right now, it's like this is stupid to get in. Anybody trying to get in Intel right now is definitely really, really dumb. Like I said, this right now. Intel is valued like over 5 times TSMC, and but on a sales level, Intel is about to be matching what TSMC is valued based on sales. But this is a hardware company. Hardware companies being evaluated like it's a software company. Okay, I don't know. Is that the right way to look at it? So that's another reason I don't like fundamentals. Like people can make things look as good or as bad, as more optimistic or more pessimistic as they want to, based on what metrics they choose to look at. They might ignore this metric, but they'll look at another metric. So they've got lots of metrics they can look at. Okay, just kind of like Netflix. Netflix, a lot of the growth in Netflix stock was because of subscriber growth, right? And then all of a sudden, because like Netflix dominated the whole sphere of subscriber-based entertainment, there was no more growth in subscribers. So Netflix stopped talking about subscribers. in their earnings calls, their earnings reports, they stop talking about it. You know, that's one way to keep your stock from crashing, right? You just like not tell people certain things so they can't measure your company based on those metrics anymore. So if you were just measuring based on subscriber count, subscriber growth, you couldn't, because they would just be like, nope, we're not going to tell you what's going to happen in the coming quarters anymore based on subscribers. You're going to have to figure that out by guessing or whatever, and then eventually people will just stop using it as a way to judge your company compared to like Paramount and Paramount Plus, HBO Max, all the other ones like Amazon, right? Amazon Prime, Apple TV, right? That's one way to stop people from measuring your fundamentals, is to just stop telling the public what it is. So that's why fundamentals, which fundamentals are you talking about? Why should I measure Intel like that? Why should I measure it like that? If I measure Intel like that, sure, Intel price right now looks fair. If I measure it in another way, it looks like ridiculously overpriced, right? It's way overpriced compared to Micron. Why doesn't Micron go up to $8,000 then, if Intel is going up to that point? See? So it's subjective too. It has nothing to do with reality either. It's all subjective. It's based on how you feel. It's about feeling, not reality. So it depends on how the market wants to judge your company. So most of these things, right, was based on subscriber growth. And after that, they said, never mind, we're not going to talk about it anymore. So let me see. Monthly. Let's do monthly. It was probably 2022 when they stopped reporting it, probably around here. After this huge drop. You see this? I'm guessing here is when they stopped reporting it. Like, the stock was already crashing like crazy. It's just like, no, never mind. We're not going to talk about it anymore. Yeah. All right, INOD. I don't know what that is. It sounds familiar. I don't know what that is. What's this one? What's this one? Is this another AI potential stock? It's already up like 142% this month. What does this thing do? Holy shit. No, man. No, is this something I should look at? Bro, I'm already putting my neck out with HUT and APL. Oh my god. Is this okay, let me add this one. Let me add this one then. Okay. Okay. All right. Let's add that one. Oh man, that's not good. Okay, let's see how much time I got left. Okay, got some time left. I have some videos I want to play, but I might save them for later tonight. I don't think I need to talk much today. Okay. All right. Data processing. We were talking about it last year when it was like $30. Was I talking about it? I don't remember this one. I don't know what this thing does. $30. I mean, there was a lot of stocks to be talking about last year. Everything went up from last year, right? If you bought the April dip in most stocks, it would go up. So for me, I was just like, well, I'm not gonna waste my time trying to figure out which one is the best performer. I'm just gonna buy SOXL from last year and just hold that as far as I can, right? Yeah, that was it. I was just like, nah, fuck that. I don't want to waste my time learning stocks, studying stocks. It's just that's how it goes. Okay, I'll put that on a list. Let me look at it a little further. Chart looks good, but a lot of charts look good, right? It's so they all have the same similar feel. So right now we're looking at Hut. Okay, so we might be ready to move on here. I like this. This move in the morning was great because IREN reported that they were going to issue more stock. So they have a stock issuance through bonds. So they're going to issue some bonds that will turn into stock. So that means dilution. So that's the bad thing about owning a lot of these high flying small cap stocks, because a lot of their funding comes from issuing more stock through bonds. So whenever they issue new bonds, they become new stocks after the lockout period. So then the market will punish them, right? They'll basically say, "Yep, we don't like you anymore. We're going to go somewhere else." So that's the pain thing. But because IREN went down, everybody else went down in the morning. But you see, Hut recovered, APLD really recovered. This is really good. This candle is very strong. So I think we found our number 2 stock. So after Hut, it's going to be APLD for me. Okay? I think that's it. I think that's I think we found our number 2. So number 1 is Hut, number 2 is APLD maybe. That's it. I don't think I need to wait for the rest of the week. This is a strong candle with a lot of volume behind it. Okay, for 78 minutes. I think we're going to have a follow through in the coming 2 weeks. Okay, so this week, watch out for dips, because I think the semiconductors are not going to help anybody anymore this week. We have expiration for monthly options, and expect turbulence as people try to get out of their positions before options expire. Okay, and then next Monday we might see a crash to get rid of any excess options positions. Okay, anybody that holds 2 options, because anybody that holds through the options, they'll get shares. So that's what happens when you don't sell your options, you don't close your positions, you get the shares of the stock, and then they'll dump the stock in the market on Monday, and that'll be the dip that you'll be waiting for. But overall, if you just look at the range here, you see we're still in the range. Good. APLD. Okay, strong candle. We're on top of this range, this larger range up here. And if we look at this APLD, okay, right there. So good. This is good. This is what you want to see. We're on top of that range. Hut, we're still inside this get range that when we gapped up. Good. Okay. Next thing up to talk about is Moderna. Okay, I think the Hanta flu hype is over. We got our hype, we got our pump. So I know where the top is, 59. I know where the bottom is from Friday, where it made its little intermediate bottom here at 52, 53. So as long as we stay in this range, we're ready to move on up. So I think that's over. The Hanta stuff is over. That's not what I was expecting to push this stock higher. What I'm expecting from this stock is FDA approvals for its cancer vaccines. Okay. That's what we're hoping for. That is what we're hoping for. That's really it. So in the coming years, mRNA is ready to go up. Because if you look at the long-term chart, somebody was buying mRNA at $24, and they kept on buying and buying and buying and buying until it started going back up. So for the past several years, somebody was buying down here, and they're not selling up here. Okay, I think they're going to sell it at a very high level sometime down the line in the future. And this is just an intermediate stopping point. So whoever traded this move, already got out in January. And then there were some new buyers that came in last earnings, because last earnings was after some FDA news that was bad for Moderna. There was like FDA commissioner and some flu vaccine that didn't get approved or whatever. I don't remember. But somebody bought at the top of this range. So that these 2 green lines are basically the range that was set over the last 2 years. And now we're out of here. We're out of here. So we're ready to continue sometime down the line. And hopefully this hantavirus stuff created this range where we go zigzag for a few weeks, and then maybe later on we can move up, okay, at the end of this year. All right. So I think we're ready to move up. So I'm gonna move out from my completely get out of my single stock and move into the leverage stock. So MRNX. Okay. So that's what's gonna happen. So mRNA, right? So MRNX is a 2x leverage. So I'm just gonna take it out and put equivalent mRNX right now for it, because I think we're gonna get ready for a move up sometime later. So gonna exit out and move on there. Once we break 59, 60, yeah, we're gonna go up to 73, right? 73 will be the next target, 73, and then after 73, we'll see what kind of new range we create into the end of the year. And then I guess next year will be the time when everything blows up really nicely and we can go up. It will depend on the interest rate situation. So like I told you guys, small cap biotechs are equivalent to a long duration bond. Okay? That's the equivalent concept. So you are buying on something that will eventually give you a lot of value later. Okay? That's how you should treat it, these guys. So they're essentially long-term lottery tickets. All right. And I think this lottery ticket, for some reason, a lot of people keep going back to. And this range is very large. Okay, from 2024 up into 2026, we got 2 years of this. So yeah, I think it could go up to back to 700, 800, something like that down the line. Okay. I think it's feasible given how the markets work, because the markets at the end of a late stage bull market, the last things that will go up into a recession will be healthcare stocks. Healthcare stocks are the ones that do well in a recessionary market. So stuff like trash like this are going to like it because interest rates are going to go down. Because when you have a recession, the Fed will start cutting interest rates, maybe back to zero again. We'll have another QE and that's it. Yeah, sounds perfect for leaps. Yes, correct. You'll probably should get leaps. Yeah, HIMS is next. So they will have earnings after the close. Let's see, peptides. So right now we got out of the Ozempic phase of this stock. So I played this last in the Ozempic phase. I didn't even buy it for Ozempic. I just bought it because of dick pills, because this thing was offering like a generic dick pills. But the Ozempic stuff kind of gave it a last pump here. This last pump here was because of the Ozempic generic, because they make generics, or not generic. I don't know what they do really. They get a license from Wegovy. I mean, not Wegovy, like Novo Nordisk, Eli Lilly, to produce their drugs, because if there's any point where they cannot produce enough of those drugs for the demand, the FDA allows these companies to produce their drugs, even though they don't have a patent, something like that. I'm not a healthcare I'm not a healthcare guru here. So you go talk to Martin Scully. Martin Scully is your healthcare guru guy. He knows all the fundamentals of this. So I don't know what he thinks about IMS. But from a chart perspective, I was looking at this when it returned back at 14, and we had some news that pumped it back to the red line. And now we're over this red line at 24, right? So we're at 29, $30 now. And if earnings does well, then we should be able to get to 40 and back up to 70. So this one also has leverage ETF to it. So there's a lot of these stupid little stocks that have leverage ETFs. I don't know if that's a good thing or a bad thing. I think this increases people's ideas that they should start gambling more. And so that will change the options market too, right? Because you buy these leverage ETFs, that will affect the options market indirectly. So it'll have earnings. We'll see how that goes, and I will see if we are ready to move on to 40, and I will switch out to leverage over here too. I think this is good to go. If it crashes though, then forget it. Wait and see if it can hold 24, 23. If it can't, then wait for the end of the year to see what it does at $20. So don't do anything before you see the correct chart action here. So APLD is the correct chart action. HIMS is to be determined, right? mRNA, we already had earnings. We got the hantavirus pump. Now we're done with the pump. Now you want to look at how it deals with this range. Does it stay in this range? Does it not? If it does in the coming weeks, then you buy, you go leverage, because we're ready to move and break out sometime at the end of the year, I'm guessing, is when things will happen. Something will break early on for the Fed. The Fed will do something wrong. The markets will break. They'll come and try to save it, and then we can pump. Okay, so maybe you have to wait till then, but who knows? Maybe this thing will just break out very quickly. Maybe the hantavirus isn't over, so I'm not 100% certain. But if you're looking to buy it, yeah, let's each time it drops at the lower part of this range like it is now, I would say like, okay, I'll take a stab and I'll buy a little bit. I'll buy a little bit each time it returns to this area and then see where it goes. Okay, if you're just buying shares, you would do it that way. That's how you would do it. You would just slowly buy it up one at a time, or you could just buy those options, whatever. Like right, if you set it up correctly. Rita getting approved soon. Oh, I don't know anything about that. Okay, I'll put it. I'll take a screenshot of this and look into it. I'm not really a big biotech trader investor. I leave that to the pros. So Martin Shkreli he has live streams where all he talks about are pharmaceutical stocks. Hantavirus is one thing that can power Moderna, but it's not the one that I was counting on. I was counting on the cancer vaccines. Yeah, I was not counting on that. Hantavirus was just something that came around to pump it back above its range here. So does it hold this range? I don't know. But yeah, you can see like we have a range, right? We have a range. Somebody is buying Moderna. I don't know if they're buying Moderna just because of hantavirus. Hantavirus is probably just an extra benefit of having it, but it's probably not the main reason it's here. Like people are here doing this. Okay, let me show you, right? Let me show you again. So over the weekend, I replayed the video where I did this, right? I did this. Like for several months, I've been saying buy Moderna, but it wasn't because of hantavirus. It's the same thing with oil. It's like I'm not buying oil because I thought Donald Trump was going to do something to Iran. No, it's just because there are a lot of structural reasons and futures reasons. There's a lot of people buying oil futures. There were a lot of other reasons, like somebody was buying in large scale oil. So whoever it was probably knew something, right? I don't know if the people who bought down here bought it just because of hantavirus. If hantavirus really is going to be a big deal, okay, maybe that was the reason. I'm not sure, but for some reason, somebody has been buying down here. Okay, somebody has been buying down here. So if you follow Wyckofffian logic, it means like this was the spring. Okay, if you look at the volume down here back in October 30th, right? There's a lot of volume, and then it went a little bit lower in November, but then it started rallying into the end of the year, into Christmas. And then after Christmas, after New Year's, we started going up again into the next earnings cycle. Okay, so for some reason, somebody said we are done buying at 24. And after that, the market just took it higher. Okay. And now we're in hantavirus. So is it because of hantavirus? I don't know. I'm not going to presume to know if hantavirus is the real reason you should buy mRNA. I think the real reason should be everything else I listed you. Healthcare will be a good sector during a recession. There will be a recession. Okay, we are about to enter the last phase of the bull market and enter a recession. In a recession, healthcare does very well. Healthcare stocks. And the most aggressive of the healthcare stocks are these little biotechs like this one, which are very sensitive to how high interest rates are. interest rates are not low, right? Interest rates are still relatively high. They're not super high, but they're not super low either. Yeah. Should I join Skrelly's Discord? He hangs out in VC all day. Yeah, go ahead. If you have questions on biotech, he's your man. He's the guy that talks all about it. That's all that's how he likes to hang out and trade and invest. All he seems to do is invest in little drug companies like this. And then he also likes to somehow short semiconductors and quantum computing. He just likes to do those things. Well, I just don't really invest except like, yeah, I don't either. That one, yeah, I don't. They're lotto tickets to me. I feel like either you have some insider knowledge, like you know what the FDA is going to say ahead of time, you know what the results of a clinical trial is ahead of time, you know the science behind the drug. You also know that, like, maybe the inside politics of the company, like, you know, the CEO or the president is friends of someone else in the pharmaceutical industry and they're going to get bought out pretty soon. So to me, I feel like there's no way you should be playing this stuff unless one, you see a good chart. This looks like a good chart to me. I have no insider information in Moderna. It just looked like a good chart. Or two, you have some way of figuring out that Moderna is really going to be the King Kong of vaccines for cancer. Okay. Um, yeah. Yeah. Whatever you want to do, man. It's up to you. I cannot tell you the future, right? I don't have a crystal ball. I have no idea. You got to do what you got to do. Everyone has their own risk tolerance, right? Some people might be like, this is fine. I'll buy here. This looks like a great place to buy. Some people will look at this chart and go like, whoa, that's an ugly looking day chart where like every candle looks red, 4 red candles. I'm going to stay away and see what it does in the uh coming weeks, right? That's you. That's on you. Yeah. Like who's going to sell it? Okay. Yeah, yeah. Okay, still gonna hold. Yeah, I still wanna hold Oracle. I think. I mean, I don't see any reason to sell Oracle right now. Oracle still looks good. Yeah. Let's see. It's the peptides, Clav OD dot. He has weight loss, muscle building, and speed. Okay, okay, I got you. I got you. Yeah, I got you. Okay, yeah. It doesn't have earnings until June. You got plenty of time to keep holding it. Yeah. There's nothing I don't think there's gonna be well, okay, maybe there's gonna be a Wall Street Journal article and they're gonna say some bad things about Oracle just before earnings. That's possible too, right? I also don't have inside information on the newspapers because a lot of these newspapers they love to create drama before earnings. Like they want to pump up a stock or dump a stock, then the really rich people will they'll tell Wall Street Journal, they'll tell Fox News, they'll tell Axios, they'll tell somebody and go like, "Hey, publish this report because I want to shake some people out of this stock or I want to pump this stock so I can get out." You know what I mean? So a lot of these newspapers, they are used by the very wealthy to manipulate stock prices ahead of earnings or even after earnings. Even after earnings, they'll make a earnings look terrible when it's not really, or they'll make an earnings look better than what it should be. You know what I mean? So that's why I hate earnings season. I hate earnings season because the newspapers get involved and they start putting out crazy stuff just to manipulate the price around it, the earnings date. So I don't like to play very close to earnings for that reason. So you got a month. You got a month out for Oracle. You got a month out for Oracle. So I don't think you should be worried as long as you bought at the right price. Remember, if you bought down here, right? Why you got to worry? Uh, you should have bought it when it was around 160 something, right? It's just dancing up here. You got a lot of room. It could go down back to 160 something and you'll still be fine. If you bought up here, yeah, I would be worried because you're just above the resistance level. So what price you get your stock in is so important. You have to get in at the right price. That's why when I told you guys to get in oil, I told you guys to get in at a certain level, a price, right here at the end of January. There was a reason to get in here because once you missed this, you had to buy up here and then you got really scared, right? If you buy up here, your psychology is way different from the guy that got down here. And you could get easily fooled and people can make news, make fake stories, shake you out, and then you miss the real run. That's how it always plays out. It always plays out like that. So getting at the right price is so important. So if you get into Moderna now, right, it's like, well, it's okay, but you rather have gotten it at $50 or lower. That you're more comfortable. Now that you've gotten that pump from the hantavirus, you're sort of going like, well, okay, if I already sold it, I'm looking to get back in, but or you held it and now you're looking at, should I buy more? That's how you should be thinking now. Okay, I sold it, I got some profit, I want to get back in, or I'm still in, but I want to buy more. Is it ready to go and move again, or do I have to wait several weeks? This looks like something that you might have to wait several weeks on. Okay, yeah. Um, so there you go. What's up, Buster Hoonihan? Okay, see how much time I got left. Okay, not too much time. Okay, what other stocks do I want to talk about? Some fertilizer stocks. I want to talk about some fertilizer stocks, and then we'll go to the space stocks after that. Okay, let's see. Okay, so MOS had earnings today. MOS is a phosphate company. It's one of the worst companies in the fertilizer group, specialty chemical group, because if you look at it, you see the chart, right? Really ugly. It never. All right, sorry about that. I think StreamYards is crapping out. Um, okay, back to what I was saying. CF. Okay, so MOS is the worst looking one. That's what I said. I think before I probably cut out. Let's see. Okay. All right. Yeah. Okay. So MOS. Okay. This one looks horrible. It had earnings today, and the results didn't look good. The sulfate prices have gotten so high because China has blocked exports of sulfuric acid. So they're hoarding sulfuric acid. And without sulfuric acid, the prices have gone very high to create phosphate. So phosphate is terrible. So MOS, bleh. I told ETF and IPI. So for some reason, MOS going down has pushed up CF and IPI. There we go. I guess the competition has gotten bad where it looks like CF and IPI are the number one picks, and I was correct. These two are the right ones. The next one I want to recommend you guys is LXU. So LXU may be my third pick. I don't know. I only want to pick the top two in this area, okay? I just want to pick the top two. I don't want you guys to just be like, oh, buy 3, buy 4, buy 5 of these stocks. Just focus on the best ones. Best one right now is CF and IPI. Maybe later LXU. I'll pick LXU. I don't know why, but there you go. So IPI and CF. Okay, so Maybe whatever MOS said was good news for its competitors right there. Okay, so something to do with sulfuric acid. I don't know. I'm not an expert on the supply chain for fertilizer, potash, nitrate, helium, and all the extraneous stuff there. Urea, right? All the I don't know. I'm not that guy here. Okay, let's look at the Rocket Lab. Rocket Lab. Rocket Lab. Okay, still continuing on. Very good. Breaking out. All right, of the 2026 high. Perfect. I like this. So, I only played this stock from here to here. This was when I played it because I always bought this thing when it went down below $4. So every time it was like $3.50, $3.70, I would be like buy, and then I would wait for it to go up, see how high it could go, and just get out. For some time in September 2024, for some reason in September 2024, it just kept going up. And I think a lot of other space stocks did the same. GSAT, AS. For some reason, there was a big hype bubble around space stocks. I think that was the main reason it went up, because it was just following the other guys. Now we're at the point where we have this trend, right? We had very good trend from last April. The trend is intact. This is a weekly chart. And now we've broken out again. Okay. So we're going to continue on up. And I think maybe a few more weeks. If ASTS reports good earnings, you know what's going to happen. The whole space sectors are going to fly. So those two stocks, and then we have Lunar, LUNR. So it looks like ASTS is ready to try to create a new trend. LUNR looks like it's already going to go up ahead of earnings, but we have to wait for Thursday to confirm. So this might just blow up 50% again this week. I don't know why. No reason, right? Maybe it's just because people in the semiconductors want to make money and they want to get out to something else. People are very greedy. When they see their stock stop going up, if they start seeing semiconductors stop going up, it starts rolling over, they're going to chase another area, and they're going to probably chase this guy right here. This one's very easy to pump. So ASTS has 2 sats going up. SpaceX, yeah, they have a lot of satellites doing their thing. Yeah, but I don't have a crystal ball. I'm sorry. I don't play earnings. I'll never play earnings. I've tried to guess what stocks do on earnings, but it's a mixed bag. I don't think I ever guessed correctly outside of 50-50. It's just looked like a 50-50 bet. There's no edge there. I can't do quantum, no revenue. Yeah. I get you. A lot of these stocks will look so ridiculous. Okay, the last thing to talk about is NBIS. NBIS will report earnings, so it'll be the last on the list. So we'll see if NBIS will compete with Core Z, IREN, CIFR, APLD, or HUT. Okay, this NBIS, the Nebius group, is a piece of the Yandex company that got out after the Ukraine war, all the like sanctions and stuff. So we'll see how that one plays out. I think I'm up 20%. So if it goes down, I can hold until next month. Yeah, what price you get it is so important. What prices you get. How can you not be bullish? Oh yeah, sure. Yeah. The cost overruns, how like rockets blowing up and then failed, customers dipping out. If there's no customers buying, like room for the rockets or people using those satellites, then yeah, you're gonna lose money though, right? It's all about the cash flow. I used to have 100 shares of GSAT, sold it. Well, now it's like 82. Yeah, man, you don't know. Like, you look at Palantir, right? I told people to get it at like $20, and it goes up to 200. Like, am I 100% sure it's gonna go up that well? No, I just guessed. Or like, I picked that penny stock at that same time, TMC. It like, okay, at the end of the year, it was back down below $1, and then after New Year's, it shoots up to like freaking $7 and $8. No, I don't have a crystal ball. I wish I did, but I don't. I can only make guesses, right? I can guess this is what's going to happen. And the better you can guess what's going to happen, the better you'll be off, I think. Uh, but you cannot just like you just cannot assume. Carvana is another one. Carvana I missed out on though. Carvana, yeah. Carvana I bought at the bottom. Let me see. Carvana. Okay. Yeah, this one is a story I tell all the time because it's a good lesson. It's a good lesson on not to look at fundamentals. Okay. Because if you look at fundamentals, you would never have bought Carvana. Okay. But yeah, I bought it down here. Not wait a minute. Did I buy it down at the real low? Oh, because it's split adjusted. Okay. Yeah, it wasn't 80 cents then, okay? It got a split. So I actually bought it at like what, $4 and then it went up to like 20. I thought it was good, right? 4 to 20. Oh, that's great. I got out, right? And then when it pulled back, I was thinking about getting back in, but then I got distracted by something else. This was during like the bottom of the whole stock market because there were so many other stocks to look at. I just forgot about looking back. But when I looked at it again, and I saw that it was already up here. I was like, "What the hell? People are so lazy that they can't buy used cars without having a middleman." And then I just dismissed it. I said, "Well, it's already up here. It can't go much higher than this. Forget about it. I won't look at it anymore." And then I look at it again. It's up here. It's just like, what the heck? And then it just kept going up, and it went back to like $1,000 or 3,000 or something a share. And this is why don't look at fundamentals. Okay, don't be biased. The trend is intact. This is a weekly chart. The trend is intact. If you just look at the chart, you would just buy it. No thinking, no brain. You just turn off your brain. I don't know if Carvana can even make a profit, really, or blah blah blah. Why are Gen Z so lazy they can't buy a used car on their own? Blah blah blah. It doesn't matter. Um, I actually bought a used car from a smaller company, a smaller competitor of Carvana way back when. That company went bankrupt because they spent so much money that they couldn't turn a profit, and then Carvana had to bail them out. So I think that made me biased against them. It's like, bro, uh, anybody could buy a used car directly from person to person. Why would they go through someone else, you know? But I underestimated how lazy Gen Z was. You know, they're afraid to talk to a stranger to make a deal in a car, right? They're too lazy to go to the DMV and fill out their own paperwork. They're so lazy to go to the bank and get a loan. They're so lazy to do any of those things. So I should have known then that I was the one wrong, and that like people would still buy Carvana stock, even though maybe Carvana will go bankrupt many years later. But between now and the eventual bankruptcy of Carvana, I missed out on all this gain by selling early. You know, I sold, right? I missed out on this. I missed out on 1,500 more percent. There you go. That's why I don't like fundamentals. You're biased. Like you have your own ideas of things. I don't want to fight the market. The market is what creates the price. If the market is wrong, I don't care if it's wrong. I just know it's going up. I have to follow it. So that kind of thinking will get you in trouble and you'll miss out on a lot of stuff. Yeah. Oh, Planet Labs. Yeah, we'll have to talk about that one too sometime. So after ASTS today, we'll talk about those other ones. All right. Okay. Avis, hers have been wild rides. I can't touch super meme stuff. Yeah, I remember yeah. We talked about Avis a little bit here. I was saying like, okay. Or like that Spirit Airlines. Yeah. Aphrodite's crystal ball. I'm sure someone has a crystal ball out there. I'm sure someone has a crystal ball out there. Okay, that's enough. I think that's enough. Moderna's down like 3.5%. I don't know. I'm so tempted to buy Moderna here. Oh my God, whatever. Oh, forget it. Forget it. Forget it. $52.44. I don't know. I'm tempted. I'm tempted. But anyway, HUT, APLD, you got that right, guys? I think you got that. Hymns after the close. Okay, that's it. Let me see if I can play a little bit, some video. We're already at the hour, so I'm gonna play some little bit of a video for you guys. and then we'll move on later today. Maybe tomorrow, but I might stream again later today. Okay. So this will be about cycles. This presentation was just wrapped up an hour ago. So we're gonna do a little cycle stuff here for you guys. So maybe it's a little boring, a little dry, but I think it's good for you guys to see the cycle stuff a little bit.
Of Cycles to the Cycles TV, what I'm talking to you. So we are live. So this is
No, STX SNDK. No, when I was like back April, I just bought SOXL semiconductor leverage. I didn't look at anything else anymore because I was already leveraged on the whole semiconductor because I bought a lot of it. I bought a crap ton of SOXL in April, May into June, you know? So if I went and did these other ones, I felt like I was putting too much risk. You have to remember, I'm an old guy. I am not going to increase my risk. I'm already taking a lot of risk by doing leverage semiconductors, right? Yeah.
just streaming live. My name is Lars Fontin, and every Monday we meet here to discuss some cycle analysis. Today I will discuss cycles in the commodities area. So we will have a checkpoint on different commodities, and we will review what the dominant cycles in those commodities tell us today. That's the purpose for the next 20 to 30 minutes. Leave me your questions in the live chat section, because latest at the end, we will follow up there. So before we jump to the start, here's our intro.
From the mind of Lars Fontinen, the most advanced cycle analysis, hot off the press.
Yeah, let's get started. I mean, by the way, we will be in New York at the end of May. If you have not thought about joining us at Cycles in the City in New York at 28th of May, so around in 2 weeks from now, we will have 3 days on site in New York, where we will meet around hundreds of cycle analysts and experts in that area to discuss different perspectives on cycles. So check out cycles.org and our New York City conference. It's an excellent place to meet person to person for that subject. All right, today, commodities, as promised. Let's jump to our cycle analysis screen. And by the way, you might see something new on our cycles dashboard today, which we have never shown before. That's also a sneak preview for the upcoming cycles conference, because what I'm using today will also be available to you and every member at the conference, and it will be introduced at the conference. So that's already a sneak preview. If you don't want to get a preview, then you should shut down and just come to New York and see it there. If you're interested in a sneak preview, then stay tuned for the next 20 minutes. Okie dokie. Looking at the screen, and it might look different. This is what I told you. I will not introduce the full explanation. What we see here is an overview about different commodities to the left, and here's some metals to the right. And we will jump into the individual cycle perspective just in a second. What you will see here is a so-called green and red bar. Yeah, if we zoom in a little bit here, so for natural gas, we see just a green bar to the right here in the center, while at the bottom for wheat futures, we just see that red bar, right? And in between, there might be commodities which have either a red or a green component. And those components are, simply speaking, the different cyclic perspectives you could take. So you could take a bullish perspective, or you can take a bearish perspective based on different dominant cycles in that asset. And sometimes there's only the case for a bullish situation. That's when just only the green bar comes into place. And sometimes there might be a situation for only a bearish case where only the red bar is shown, like on soya bean and wheat here. And sometimes you can make both cases, yeah, like a positive and a negative scenario. That's where cycles are in between. That's just the simple way of explaining what those bars mean. And that finally gets up to a total score here. So interesting, yeah, for us are those with either big green or big red scorings. So let's start with natural gas. Natural gas has a high green cycle score, and what this means is quite simple on the dashboard. So that simplifies a lot. Before we jump to the conclusion, you can see here at the bottom, this is the usual cycle scanner perspective. What makes that analysis quite fast and easier is that the cycles are now pre-selected for our composite. So here 4 cycles are selected, and the most important one are based on our standard procedures like stability and ranking are in the most important ways. And then they are enriched also with some other cycles which have a high strength here, which makes sense. But I will reveal the full procedure in the New York conference, but that makes it quite easy, yeah, to select those 4 cycles which are valid, yeah, based on different perspective. And if I talk about they are valid, you know that we are talking they have a high stability, which means low variability over the past time. They have a good ranking in terms of how the peak looks in the cycle spectrum, yeah, second factor. They have a high strength, which means that their cyclic amplitude over the length, so over the period, has a meaningful impact on price movements. Otherwise, I mean, a stable cycle would not make sense, yeah, if it has not a meaningful amplitude-wise impact on price movements. Why should we care about it? So that's the third perspective. And that all sums up into how we select dominant cycles. If you are part of this channel, that's always the same procedure we are outlining here. This has now become much more automated, much more mechanical, which helps everyone sitting in front of those screens. So looking at natural gas as one commodity tells us a clean picture here of, and we have revealed this
Okay. Yeah, I think I gotta go right now. So we'll continue. We'll continue on this later, but I think you get the idea, right? I kind of mentioned this stuff before about like, oh, stability and other things. Yeah, we could continue on this later today or otherwise tomorrow. But they're improving how their software works, right? You see the rankings with the little gauge now. You got this little gauge. So if you guys are going to New York anytime in late May, I don't know if you're willing to drop $1,000 to go to the presentations. Yeah, go to cycles.org and sign up. I think they only have like 5 seats left. Okay, so if you really want to go check this stuff out, it's there. They're going to talk more and more about all this cycle research and things. And yeah, later on we might go over his book. So all the stuff that's in that software is based off of his book. And the book is kind of old though, so he's improved from the early days of his research into cycles. So, but that gives you a foundation. If any of you guys are into the technical aspects of digital signal processing and mathematics on how to derive these cycles, then yeah, you got to go and we can go over that book. But I think that's way too nerdy, way too nerdy. All right, Hut G, yeah, I don't know. You're gonna have to wait. Maybe you might have to wait it out a little bit longer. This week could be a bad week because today we got a good pump on semiconductors. Tomorrow into Friday, maybe all that will go away. And without semiconductors holding the NASDAQ up, maybe you'll get Hut G at a better price, right? Okay. All right. We are Boyd. Regards. Yeah. Well, I don't know how much the Boyd knows, but some of you guys seem to know this stuff. Yeah. Well, Built to Spill, we'll talk. We might talk about McDonald's. McDonald's is a good stock, but you know what I like more than McDonald's? I like Coca-Cola better. And not just any Coca-Cola, the bottling part of Coca-Cola for the United States and Mexico. There is a bottling company that I like. Maybe we'll talk about that sometime down the line. So there are some fast food staples and junk food type stocks that we might cover when the recession hits, though. You know, those type of stocks are more interesting when we get close to a recession. Hershey, I haven't looked at in a long time, so I don't know about Hershey. Yeah, but usually I'm not going to look at those type of companies until we are in a recession. I have started looking at real estate stocks, though, some REITs. They have been looking very good these past couple of weeks, some of them. They've looked very attractive. So I might have to start doing some nice real estate stocks. Yeah, there's a big Coca-Cola bottling facility and Walmart type company in Mexico. Mexican stocks are kind of my favorite, and it looks to be gonna go up even higher. Hershey looks similar to Coke. Okay, yeah, I'll look at it. All right, guys. Later.